Welcome, my name is Vishal Texanani. Today I'm speaking to Mike Hirst, the Managing Director of Bendigo Adelaide Bank, and we're going to talk about the bank's recent results. Mike, thank you for coming in. How are you?
I'm very well, thanks, Vishal.
So Mike, Bendigo Adelaide Bank just released its first half 2018 interim results. Can you talk through what you felt were the highlights over that 6-month period?
Sure. So our margin expanded pretty well during the period. Part of that driven by the fact that the regulator sat on top of growth with macro-prudential caps, but also because we were able to manage our liability base pretty well. On top of that, the costs for about the 6th half in a row remained pretty flat. Yep. So the jaws, or the difference between the revenue we generated and the expense we had, was reasonably wide, resulting in a good profit result. A key strength's been the balance sheet. So we've now got a capital position that's about 65 basis points higher than the previous half. Yep. That means that we've passed APRA's rules for unquestionably strong, which aren't due to be hit until 2020. So we're in a really good position there. Finally, our funding, 80% retail funded, half of that in term deposit, half of that in at-call, which are low-cost transaction accounts, means that we're well placed for a rising interest rate environment and also for any inorganic opportunities that might come along.
Okay, so that all sounds great for the short term. Let's talk about the long term. On NAB Trade, we've got a number of, quite a significant number of shareholders and hybrid holders invested in your institution. So what would be your key messages to these investors in terms of what you're doing to make sure those earnings grow, those dividends grow, and that capital position you just mentioned is going to be as strong?
Well, I think the key thing is just where we're positioned in the current market. So in an environment where there's lots of inquiry into what banks have done and what they'll be doing going forward, we would expect that our customer centricity, what we do in the community, what we're known for in terms of feeding into the prosperity of the community rather than off it, will give us a really good opportunity. That's going to be coupled with a greater focus now from the regulator on creating a level playing field. So I've been calling for probably 5 or 6 years, along with other smaller banks, for an evening up of the playing field that has been disrupted by legislation or regulation. The Productivity Commission report that's come out has also been very strident in saying that that needs to be addressed from a competitive point of view, and the Royal Commission, I think, highlights the fact that when you have competition concentrated in a small number of players, then perhaps you have some unintended consequences. So when the environment's highlighting our point of difference, when the regulator's focused on making sure that the playing field gets levelled up, and when we've got a strong balance sheet position with lots of capital and a great funding position, you know, we really couldn't be in a better place.
Okay, so let's talk about risks. What are the risks that worry you? In particular, your bad and doubtful debts did have a slight uptick. Are you worried about that escalating? Will it stabilise from here? And property prices, what worries you?
Well, not too much, to be honest. I think the major concern that I have is cybercrime, like every other CEO and every bank around the world, just trying to understand where that's all headed and being prepared for what might happen there. And right now, every bank's doing a great job in protecting against that. But it's, you know, Donald Rumsfeld's known unknowns, and we need to be concerned about that. But in respect of the credit piece, the absolute credit result for us is still the lowest in the industry. Yep. It's still at absolute low levels and pretty consistent over the last probably 5 to 10 years. So there's no real issue there other than a slight tick up in this half. The forward-looking opportunity around credit is best illustrated by arrears and impairments, both of which were down in the half.
Okay. Last question on M&A activity. So it's been quite a while since we've seen proposed or actual M&A activity within the regional banking sector. So against a backdrop where it's, you know, tough competition for mortgages, you mentioned cybercrime, and you've got the threats of technological disruption. What's your thinking around M&A in terms of both consolidating with other lenders or buying other lenders within the sector, and perhaps, you know, making a play on technology businesses if they're consistent with your ambition of, you know, delivering a good technology experience or reducing operating costs?
Sure. So, you know, we're always very cognizant of what's going on in the market and where there are opportunities. In the last 5 years, we've made a number of acquisitions that have been very good for the business. We purchased Rural Finance from the Victorian State Government, which is an agricultural lending business. We've got now about 10% of the agricultural market in Australia as a result of combining that with our rural banks. So that was a fantastic purchase for us. Similarly, we purchased Bank of Cyprus's business during the GFC when they got into a bit of trouble, and so we've been opportunistic around M&A, buying things at good prices that contribute to our business. In respect of technology, we think that there isn't anybody in Australia who will be able to keep pace with the change of technology on their own, so that means you've got a partner. And we're doing that in a number of areas. The one that's getting the most press at the moment is TikTok, which is a home loan platform that can approve your loan in 22 minutes if you have all the information you need available. That's doing about 20 million a month in origination. We're a 30% shareholder in that company.
Yep.
But there's other companies who we just partner with. So we're going to be launching a digital bank later this year in partnership with a fintech who we've worked with for 5 years, and they've built our mobile banking platform, which is rated number 2 in the market. So we understand partnering well. We partner with 317 communities around Australia to provide branch banking, and we're taking the same approach to the digital platforms that need to be developed going forward.
Okay, so in summary, M&A still open to it where it makes sense, where the opportunity is right, and partnerships, of course.
Yep.
Okay, Mike, thank you so much for coming in and for sharing with our audience insights on the Bendigo and Adelaide Bank interim results and your bank's future prospects.
Thanks very much, Vishal.
I hope you enjoyed that video. Thanks so much for joining us. My name is Vishal Tekshanani, and I'll see you next time.